Which turkey should be pardoned?
You won't let me wear my English hat, so we're not ready for that.
Morning, Larry. Can we ask you about the market this morning?
I wish you would. How's it doing?
With the futures the way they are, it looks like the Dow, S&P, and NASDAQ are going to be negative for the year at the open this morning. What role does the president's trade policy play in the market side?
Well, I don't know that they'll be negative, Eamon. We got some weeks, got some trading left. They might finish higher. What role is trade playing? I think there are a lot of factors here. I don't want to get into the architecture of these corrections. As I've said many times, corrections come and go. I hate to see anybody lose any money any time, but we know that's the reality of it. And you got roughly a month left in them, so we'll see how the year ends. I will say, as it did earlier, economy is very sound. It's funny. If you go back a couple of weeks, that's all it was, a couple of weeks, we had a phenomenal jobs number, right? It's 250,000 jobs. Nobody expected that. And as I recall, the wage rate was 3.1% year on year. The unemployment rate was 3.7%. Those were shockingly good numbers. Now, I understand that stock market sell-off has perhaps dampened some of that optimism, but the economy is doing extremely well, and I don't want to lose sight of that. I'm not here to make any predictions about the stock market. Arguably, you know as much or more about it than I do. I'm just saying the economy is doing very, very well. And one little nugget I had this morning for everybody, a very important release. I don't want to get too deep in the weeds, but this is important. Industrial production, the output of mines and factories and so forth, very good number when it was released last week. And inside that number, business equipment was booming, up 5 straight months, 13.1% at an annual rate for the past 3. I say that because CapEx and business equipment, which is very important to our scenario, looked a little soft at the end of Q3, although the numbers might have been somewhat logy, but it looks like it's coming on very strong here in Q4. So I'm quite hopeful, and we're clicking on all cylinders, and incomes are rising. Incomes are rising, that's great. So I'm just saying, let's not forget the good news. Hi, Major.
Hi, Larry. What do you make of some of the statistical reports that suggest after tax reform, large corporations did more stock acquisitions and dividends than investment or higher wages? I know all the statistics you just cited, but there does seem to be a heavier emphasis on either dividends or stock buybacks than was projected by many of the economists, not necessarily you, but people here when pushing tax reform.
Let me say this. First of all, there's nothing wrong with stock buybacks, and there's nothing wrong with dividends. It just means shareholders get the money, okay? That's a good thing. They will reinvest that money. But we have had very strong business investment, capital spending, what the street calls CapEx, very strong. And as I said earlier, looked a little soft in Q3. I don't know, it's 3.5% GDP, not bad. Now, as I mentioned, the latest production numbers, business equipment is booming again. So I think you're going to see, I think, I've said this before, with the lower tax rates on large and small businesses and the 100% expensing, and I think a big urge for, men and women to own and operate their own companies. I think that's really part of the new face of the Trump economy and also the blue-collar gains. I just think this is going to be the best business investment cycle we will have in 20 years. We haven't had one, and I'm going to be totally nonpartisan here. Dems, Republicans, really since the late 90s, Major. I think now it is resuming, and that's a key part of our own our own planning and our own incentives. So I think it's happening. Happening.
Larry,
go ahead.
One other question. Do you anticipate during the lame duck the Senate will put together a budget resolution and the House pass the Trump tax cut 2.0, or is that not going to happen?
Look, I think we're all noodling on that right now. I think tax reform 2.0, one version of which got through the House already, Kevin Brady. I think we're all looking at it. I think lots of changes to make the code more efficient and more pro-growth. Flatter rates for everybody, particularly middle-class people. Get rid of the loopholes. You could have pay-fors on a lot of this stuff, but it's early. None of this, I think, will happen in the lame duck. I don't see it. I don't see it. But that does not. That doesn't. Some of my best friends are Democrats. That doesn't mean we couldn't get something in the new session.
But Larry, as Democrats take over next year, do you expect
take over
the House?
Yes.
As Democrats take over the House next year, do you expect growth and job numbers to slow as they put roadblocks up to what the president wants to do?
No, I don't think so. I beg your pardon. No, because look, I don't see any results that will roll back the Trump economic growth policies, which were low tax rates, small businesses, large businesses, individuals, middle income, low marginal tax rates, way back, rolling back deregulation across the board, a tremendous surge and unlocking of energy. These are the big forces behind this recovery, which has jumped from less than 2% to over 3% growth. Do I see? No, I don't think so. And I first of all, the Senate, we picked up a seat in the Senate, and I don't want to get too partisan here. I'm just saying the people in the Senate who helped to get the Trump plan in place will be even stronger. And frankly, I think if anybody really wants to roll back the Trump plan, I believe he'd veto it. I really do. This is the best growth we've had in years and years. It's because of his policies. He's an optimist. He has changed the whole psychology of this country. He said many times, we will reward, not punish business. The war against energy is over. That is take a rip at the ball. I've got your back, and these policies are not going to change. That's my take.
What about the wall? The president continues to push this wall issue. And if there is indeed a wall, I'm hearing from CEOs, major CEOs in this nation, who say if this wall happens and you block Mexican low-wage workers coming into this country, it's going to cause prices to go up. Talk to me about that.
Look, I don't want to get deep into that point. I appreciate the question. The president has for quite some time had an overall immigration reform plan, and I think it's quite a good one. And we want to move towards legal immigration, obviously. We want to move towards the merit system. We want to move towards a law and order system, as you well know. He is going to be insisting on that. In meetings yesterday, I heard him absolutely insist on border security. So I don't think that's going away. Now, your implications, I think regarding all the many visa programs, we understand that businesses have certain requirements, and we will try to accommodate that where possible, but it's got to be done legally. It's got to be done properly. It's got to be done with the right visas. It's got to be done with enforcement. It's a very complicated issue. So we are aware of what business needs, but we are aware of what the country needs.
But it could affect the economy, and cause the price of items to go up. What do you say to that?
I think if we do this right, i.e. immigration reform, legal immigration reform, a new merit system, if we do this right, E-Verify, the economy will benefit enormously. We will benefit. We will create new opportunities for legal immigrants. That's my take. Over here. Yes, ma'am.
Can you step up to the podium? We can't hear you.
I'm sorry.
The president, let's talk about the G20 for a minute.
Yeah.
The president was originally supposed to go to Colombia as part of that trip, but then called it off, citing scheduling concerns. Can you tell us what those concerns are? And can you speak to the possibility that he could visit the troops in Iraq or Afghanistan? And then a second question on the G20. Saudi Arabia is supposed to host the G20 in 2020. Does the United States have a position on that, or are you still in favor of it?
They're great questions. I don't want to get ahead of the game. I just can't. I just can't comment on that. It'll all unfold. Mr. Bolton and others will have a lot to say about that over a period of time. again, I don't mean to dodge.
Sure.
It's a bit outside my lane. I'm the economics guy. You'll see me.
You're the guy going to the G20.
I'll be at the G20. I'll be the last guy when they file in.
Okay. Well,
Okay.
how about APEC then, Larry? The tension between the Vice President and Xi Jinping. Stock market's headed for another plunge today as a result of all that. What do you do in regard to China?
John, I thought Vice President just stood up for America. I really do. He has made this case before. He spoke to President Xi several times during that meeting. A lot of opposition, as I understand it, wasn't there. My deputies were there. As I understand it, among those countries, a lot of opposition to what China was trying to do with respect to this idea of infrastructure and forcing debt down their throats, and in fact using Chinese workers, not even local workers. A lot of opposition to what the Chinese are doing. The Chinese seem not to like it. I don't want to conclude anything. I saw the Vice President yesterday and talked a little bit about this. It'll come to a head at the G20. I think that's the key point. But Vice President Pence, as he always does, defended American interests.
What about all the volatility in the markets? Is there anything you can say to investors? Stop the swoon?
I knew you were going to ask me a volatility question. I absolutely had you pegged. So I checked this morning. The VIX, right? We're all into the VIX now, long and short. It's only 20. Not bad. It's not bad. I mean, it was a lot worse 10, 12 years ago.
One of the criticisms of
keep the faith. It's a very strong economy. I'm not here to give you, God knows you don't want a Kudlow prediction. I'm just saying the economy, the basic economy, has reawakened, and it's going to stay there. I mean, I'm reading some of the weirdest stuff, how recession is around the corner. Nonsense. My personal view, our administration's view, recession is so far in the distance, I can't see it.
Larry, one of the
criticisms. Do you have any reaction to Ivanka Trump's use of a private email account? Two of your former colleagues have described it as hypocrisy, given their criticism of Hillary Clinton's use of a private email account.
I'll just say this. I think the absolute world of Ivanka Trump, who is a brilliant woman and a really important advisor to all of us. Period.
Other questions? One of the criticisms of the tax bill was that cutting taxes when the economy is doing well removes a tool from the box for dealing with a future recession. So you just said that...
Run that by me again.
One of the criticisms of the tax bill was that it removed a tool from the box for dealing with a future recession. So regarding another tax cut, what if you're wrong? You just said that a recession is far off. What if you're wrong? Is cutting taxes now when the economy is still doing well make it even harder to deal with that future recession?
I'd love to talk to you about this at much greater length. These are supply-side tax cuts. These are not demand-side. What do I mean by that? We're not just pouring cash into the economy one time and then it goes away. We are lowering the marginal tax rates on C Corps, S Corps, LLCs, right, large and small. That means you'll keep more of what you earn. You'll keep more of what you invest. You'll keep more of what you risk. Those are permanent reductions in marginal tax rates. They don't expire, or we're not about to let them expire. So this is different. Here,
so what happens?
We are creating incentives. Hang on one second. We are creating incentives to increase the economy's potential to grow. You follow? It's coming from the supply side of the economy. It's not a demand side tax cut. And by the way, one of the reasons inflation's coming down, hang on a second, do you know we're disinflating? About a year ago, the Fed's measure, PCE deflator, was about, God, I hope I get this right, 2.7%. It's dropped back to 1.4%. One of the key reasons is a steady and strong dollar. Another reason is we are increasing the supply of goods and services, which, if you have a bumper crop in the supply of apple, what happens? What happens? The price comes down. We're seeing that throughout the economy. So this is a different kind of tax cut. I lived through it. Look, I hate to do this. This would be so so immodest of me. But there's a wonderful book out there. It's called JFK and the Reagan Revolution. It's all there. It's all there.
But what happens if you're
one click on you know what?
Sir, but what happens if you're wrong and taxes are cut to the bone, and there's nowhere to go? There's no way to do anything because we're already stuck at a very low tax rate. What happens? I mean, isn't it better to have flexibility, to give Congress and give policymakers flexibility instead of possibly putting nitrous into the economy and just making the drop even worse when it comes?
I can't think of anything healthier for an economy in the long run than to reduce marginal tax rates. This is me talking, not the administration, right? Low, flat, marginal tax rates for individuals and businesses. Take out the flotsam and jetsam and so-called loopholes, make it a simple code that everybody can understand, put it on a postcard. You're creating massive incentives for the kind of economic growth we had in the 60s, in the 80s, and I think we're having it right now.
Talk about spending a little bit.
Predicting a GDP slowdown next year. Goldman, I think, put out a number of 1.75. They're predicting late in the year next year. Is that accurate in your view? Is there a GDP slowdown coming?
I don't even remotely agree with that. Eamon, my distinguished friend and colleague Kevin Hassett, chairman of the CEA, had a very spirited critique of the Goldman Sachs track record. I'm a nicer guy, so I'm going to avoid those kinds of implications. But if you want to footnote that at greater length, please talk to Kevin.
Larry, holiday spending's coming up. Holiday, you mentioned the average hourly wages rising.
Yes.
And the holiday period's coming up. Do you believe that people will spend during this holiday, or do you think it's going to be softer than normal?
I think it looks great. I mean, incomes are doing very well. And by the way, you've got...
But those retail stocks are down today. The market may indicate it might be softer.
God help us, but I'm just saying incomes are rising. Middle incomes, blue-collar incomes. My favorite supply-side newspaper, the Washington Post, did a wonderful study. I believe it was my friend Heather Long, front page above the fold, that the biggest gainers in employment growth and jobs growth were the blue collars, beating the white collars. I have nothing against the white collars. All I'm saying is you're at a point right now, as the expansion flourishes, incomes are rising after tax. By the way, here's one more.
Well, will people spend?
Well, of course they'll spend if they have the income. I'm not opposed to saving. Saving becomes investment, but yes, they will spend. How about this? The oil price in the last few weeks has dropped how much? $20? Do you think that's going to help? I do. This is, by the way, inflation's coming down. That's a wonderful thing.
The state sponsors a terror list. How does that affect the oil price?
I beg your pardon?
How would adding Venezuela to the state sponsors of terror help the oil prices? What happens if the administration does that?
Sorry, I'm not sure where you're going. All I'll say is, as a fact, both Brent and West Texas have fallen substantially in the last few weeks. That is going to benefit consumers. And producers can still make good money at 55. One last question, if it's really...
increasing deficits.
Yes, sir.
Yeah,
yes,
increasing deficits, and the Fed is increasing interest rates. It's been said that that's sort of a suicide mission. What's your view on that?
Look, I'm not going to critique Fed policy today. All I'll say is, my view, take it for what it's worth, I'm a supply-sider. If the economy grows faster than expected, then those deficits as a share of the economy come way down. That's what history teaches. So, for example, if the establishment forecasters here in town say you can't do better than 2, and the actual scoreboard produces 3 or more, I believe it's something like $3.5 trillion of lower deficits occur. So the trick is to get your deficits down as a share of GDP. The other trick is to hold spending. The president has indicated a very tough, what we call the nickel budget, 5% cross-board reduction. I think that's going to be a very strong piece. and the economy is growing. And I think next few years you'll see the deficit burden come down quite substantially. It's too cold for all of us. Thank you very, very much.
Are you optimistic there's a path forward with China?
Neil.
Yeah.